All right, Steve. I'm going to try to keep this relatively brief and not too detailed because I think simplicity is best here. This is Jesus. It is a video for the week of May 28th, which is next Tuesday. This is good for the entire next week, and I'm also going to do a little forecasting for the following week. So maybe we could do this every couple of weeks. I don't expect this to take more than 5 minutes or so. But let's take a look at this is the weekly Kansas City HRW now reflects the July contract at this point in time. If we take a look at, we had a key reversal low a couple weeks ago. We actually closed at a new, almost, I think it was more than a 10-year low following the 2008 highs. This is the lowest the market was. We closed at 387 even. The following week, we put out a new low, close above the preceding week's high. That's a key reversal low that is significant on such a long-term turn, a long-term 10-year low. We put out a key reversal low that very week. That's usually a sign that that low is good, quite possibly for the season ahead. But we've got some challenges to the upside. So let's talk for the next 2 or 3 weeks. Right now, I've got good support this week, and this is a static level. It'll be good for the next several weeks. The high of this low is 525 half, and the settlement of that week was 520 and a quarter. So we'll just call 520 and a quarter to 525 half is your weekly support for the week ahead, and that'll be good for the next couple of weeks. And above this, I am expecting this channel formation next week at 560 and three quarter, and the following week at 457 half. So 460 and three quarter drops to 457 half the following week, the first week of June. This is a channel structure that could contain buying into later June trade. And in fact, once we test it, there's no reason to discount the possibility that not only do we slip back into the lower 520s, but quite possibly back to this low settlement price of 387 even, which is consistent roughly with this old 2016 low at 395 even. So this region, 395 even to 387 even, is your support region through June. In fact, above which we're going to continue attacking this 460 and three quarter channel top. Now, I do think there's a case to be made, and I think Chicago Wheat is putting out a buy signal later today. This is Friday. And if that's the case, then upward continuation is likely. And I think the seeds have been sown for a possible rally that could sustain itself into summer trade. And that signal, secondarily, would be a settlement above 460 and three quarter for this week. And once again, 457 half for next week. And if so, then expect upward continuation over the next 3 to 5 weeks or by July expiration into the low 520s, 523 and a quarter. Next week drops to 521 half. The following week drops to 519 and three quarter the second week of June. So it's all sort of in the low 520s as we continue into June. Along the way, you do have a 50% retracement that's consistent with this low consolidative region at 490 and a quarter. I'm only throwing that out there in the event that you're kind of a near-term trader where you might trade at 2 to 3 week time horizons. I don't know if that's true, but let's put it this way. Right now, if you're a near-term hedger that could play out into late June, you may consider setting a hedge in the low 460s. But if you're more of a hedger that looks through a whole season, like into later summer, then you should be hedge free right now above this 387 even to 395 even, because I do think above this area, especially given the fact that we put out this key reversal low and we closed below this 2016 low and came screaming right back, I do think you've got a lot of good bottom picking down in this area. And I think holding above 387 even to 395, there is a case to be made for a 520s target over the next several months. That would actually be confirmed with a settlement this week above 460 and three quarter. So I don't see it happening, but if we close next week below 387 even, just give me a call. I'll shoot a new video because we'll have some significant downside targets. I do think we'll have a significant downside move that should play out into later summer if so. But right now, let me summarize once again what happened a couple of weeks ago. Could be a seasonal low development. I think there's a better chance than not that it is, although I am respecting this channel formation on the way up that could contain highs into later June. 416 three quarter drops to 457 half the following week. And if we close above it next Friday, 4.1675. This market continues this vertical move, which over the next 3 to 5 weeks should yield 5.2325, where the market, the July contract, can top out into expiration. And because this is a weekly chart, it'll include the following contract. I'm not really adept at the Kansas City wheat. If it's like Chicago, it'll be the September contract and then the December contract, but I don't know if it sequences like that or not. That's really all I've got to say for this video. It's 5 minutes plus. If you have any questions, just give me a call. Otherwise, prod me, please. This is something I could easily forget about because I'm pretty busy right now. But I can certainly shoot this video every couple of weeks to keep you abreast of what's going on with Kansas City wheat. And that's all I got to say.